obviously great to be down here in sunny California. We was here once before, about 25 years ago, so it's really nice to see how this has changed, to be back in San Diego. One thing I know we're going to be talking about a lot today, which is very relevant to our business, is that the ETF world has changed dramatically. So I got started in ETFs in the early 2000s with BlackRock when we were launching the first ETF products. And at that time, we were the only company in the world launching ETFs, and it was a product that we designed for retail investors. But the irony was that that product was hijacked by institutions, and institutions today dominate in terms of assets under management. But I would say really the last 10 years, particularly since COVID, obviously, that dynamic has changed massively. And so you have companies like us, we build products specifically for retail traders, active investors, self-directed investors, and this is a monumental shift in the industry from where we were 20 years ago. So the market has changed. The new dynamic in investing is the self-directed investor, retail investor. That is the future, and companies like us, whether we're building leveraged single stock products for traders, or whether on yield boost offerings of ultra-high yielding ETFs, whether it's gold, commodities, whatever, these are all high conviction products or high conviction investors. I think we're going to be hearing a lot about that trend today. So thank you. Thank you everybody for attending. Let's have a great day. Thank you.
Will's here if you have questions. We also have a lot of presenting sponsors who are in and out of both rooms over the next few days, and obviously supporting sponsors. So I appreciate everybody for coming, and obviously our sponsors for making this happen. And obviously thank you again, Will, from GraniteShares. So what's today? What do I want to cover? What you're going to see a lot of today is, I'll break it down into three categories. The state of retail investing, which is super important, because like a lot of things it's misunderstood. The state of the markets, which if you know me, you know I talk about it once a week or twice a week. And then the state of Stocktwits, which is, you know, the team of Stocktwits is here, and we have an incredible roadmap and incredible growth in the last few years, and ahead of us. And they're all connected. This is a good slide on the state of retail investing, because I think it captures two things. Not that it's just an explosion. Right? We had an explosion in 2020 with COVID and people getting money in the mail and Robinhood and staying home. But we're back on trend right now, and this is more exciting. It's not like retail goes up to 30% one year and crashes down and gives up. We are on a sustained on-trend train. And if we went back to when I started in '98 at the Yahoo Investors Portfolio, we'll get to, we were probably at 2-3% retail. And with prediction markets and options and globalization of retail, we're going to be 20 to 25% again in this year and next year. So that's where we're at. I believe this, I say this every year, and I think I've been right since 2014, is why this is, every year, why this is the best time to be a retail investor. And obviously, I say this as someone who started a retail investing platform and an investor in Robinhood and eToro and Alpaca this year, and ETF companies that you see like Will's from Granite. Real-time information. You've got deep research tools, from Fiscal.ai, one of our portfolio companies, Rhind, to Koifin, another portfolio company. These are really inexpensive tools to help you to be, have the same tools as institutions, and obviously Claude from Anthropic and OpenAI. So everybody has a CFA in their pocket. Obviously, transaction costs commoditized. We all have traded online now, and they realize that it costs nothing other than the spread and liquidity issues. But again, pretty much next to nothing. So we are on the same footing. Wall Street now loves retail. When we were small in '98, '99, they didn't care if we blew up or didn't blow up. They don't want us to blow up now. We still blow up occasionally, but they don't want us to blow up. because we're 25% in growing as a market. So we're too big to ignore anymore, and that's why this conference grows and why we have an IR track and public companies are using Stocktwits all day. The other thing is Gen Z has embraced investing. 35% of 25-year-olds have investment accounts in 2024. That's up from 6%. That's like 400% increase amongst the people that really need to learn, because those are the people getting handed down the money. That's the biggest thing that happened in the market. Crypto is $4 trillion. $3 trillion of that is Bitcoin and Ethereum. So there's $1 trillion in, I call it like penny jar money that used to sit in our cars on the floor, in between our couch, where we eventually find it, but it was in the car, and now it's online and digitized. So that $1 trillion is findable, right? It's in wallet. It's not sitting somewhere, penny at a time. And then there's prediction markets. As you see, you can now bet on the direction of Tesla, whether Tesla will be earnings, and we'll talk about quality market. They're here today as well. And they really, obviously, just raised $2 billion from ICE, who's also in the room. So this world is growing fast. And then retail is globalized. So it's not just you. There's this everywhere. Rooms everywhere like this, because of Alpaca and Robinhood, etc. So this is the most important slide. Now, retail's moving markets in unprecedented ways, and that's obviously because of Robinhood. And Robinhood just launched prediction markets last year with Callsheet, and they're going to launch their own social in 2026. And for Stocktwits, this is great. It's not about competition, it's about, Robinhood's not taking social, they're not doing it just as like a little feature. Like Stocktwits, we were just early, they realized that this is just getting going. So, and you can see that in the stock price, right? The assets under custody reached $280 billion. That's us. That's the retail investor with $4 grand to hundreds of thousands of dollars. People thought it was a fad. It's not. This is how silly things are. Remember when you couldn't become president if you couldn't spell tomato? Well, the same thing happened with risk, right? 4 years ago, as a Robinhood investor, we had something called confetti. They tried to basically, from Elon Musk down, they were like, Robinhood's evil because confetti would flitter down your screen after you made a trade. And as an investor in Robinhood, I just found it like, we were arguing over confetti. Flash forward 4 years, and you can bet on MLB, on NFL, on the direction of the Fed. So within 4 years, we went from almost being canceled for confetti to prediction markets. You can tell the direction, right? So again, ignore the headlines. Look at what's happening in the market. And then obviously the cash tag, which we're proud of. Me and a couple people, we came up with this idea back in 2007 to coordinate a discussion around ticker. And it's outlasted the hashtag, which gets all the press, but the hashtag is live everywhere, right? And this is a person I don't know in December that said, culture is no longer just something we post about, it's something we will own together. Okay, so he doesn't know who I am. This is the great thing with the hashtag. Who cares who invented it or whatever? We're proud of it, but the point is it's become a symbol of how people talk about money and finance. And so we started it, Twitter embedded it and made it their own in 2012. It's used to track and organize conversations about a stock or other asset. And now it's everywhere. We have the hashtag awards that were great in New York. It's Stocktwits, it's Twitter, it's Beehive, it's Substack, it's the Cash App. It's a symbol of what I call the retail and now the degenerate economy. The hashtag's everywhere. This is incredible. This is how it's per, I don't know if anybody saw this, but this kid looking for a job at Callsheet, right? And so he's just a 17 or 18-year-old kid, and he figured he'd spend money, buy a ticket to the Cubs game, wear a green Callsheet shirt, because I guess you can yes or no or your bets on Callsheet. And use the dollar sign yes, right? And the amount of impressions this kid got to try and get a job at Call Shape, because he knew he'd be, if he wore that green shirt behind home plate during the Cubs playoff game, he'd get millions of impressions, and the announcers would talk about him, and just, there'd be shots from outer space with his green shirt standing out of the Cubs stadium, and it worked, like, and that's what people think about money and predictions and investing right now, and they're speaking the language, whether they acknowledge Stocktwits and the cash tag or not.